Hi there, welcome to Nepi Invest. I'm not sure if I have mentioned the company I'll be featuring in today's video, Metro Mining, often in my videos in the past, but I'm pretty sure I have not done a standalone video on this company. And one of the reasons I've decided to do a standalone video on Metro Mining is because their September quarter, their Appendix 5B for that quarter actually looks quite promising. The company is or was operating cash flow positive, free cash flow positive, and they've started to increase their cash, which is actually quite important for this company, particularly this time of year. And because this company has quite a bit of debt, which is a pretty significant red flag. And I'll talk about that later in the video. Now, Metro Mining is all about bauxite. They actually mine bauxite in northern Cape York, so just north of Weipa. I think about 100 kilometers north of Weipa. And bauxite, for those who don't know, is the most common ore of aluminium. And in fact, I have read somewhere that the only way to get aluminium is through bauxite. I'm not sure if that is true or if where I read that was completely wrong. Anyway, there are three stages to the extraction of aluminium. First is the mining of the bauxite ore, which is where Metro Mining comes into play. The second step is refining the ore to recover alumina. And then the last step is smelting their alumina to aluminium. So when it comes to Metro Mining, they are one of the only bauxite miners on the ASX, maybe the only bauxite miner on the ASX. There are some other companies that are in the three-stage process of going from bauxite to aluminum. One of those is a company called Alumina. Have a look at that company, ticker code AWC. And the reason I know that company is because the share price of Alumina is down a lot, possibly even at support levels. And I have heard some chatter that alumina is looking really cheap right now. I don't think that's because of the price of bauxite, because Metro Mining have made it quite clear that bauxite prices have been increasing over the past few years, or at least the last year, and that is beneficial to Metro Mining. Now, to a few facts in regards to Metro Mining. I've already discussed what this company does, so I can skip the business part. Now, onto the history of this company. And I did find the history of Metro Mining quite fascinating. And the history of this company began in 2009 when another company listed on the ASX called Metro Coal. And Metro Coal had some coal tenements to the west-northwest of Brisbane. I think it was in the Darling Downs, northwest of Toowoomba. And obviously, as Metro Coal, and because they had coal tenements, they wanted to build a coal empire. And of course, between 2009 2013, the management of Metro Coal realized what they wanted to do was not going to work. And then there was a proposed merger between Metro Coal and another company listed on the ASX called Cape Alumina, who had some bauxite mining tenements in northern Queensland. This was in late 2013. But because the Queensland government at the time wanted to protect the area from being mined, the merger was terminated. And what did Metro Coal do in response? Well, they terminated the deal, the merger, but they started to acquire Cape Alumina shares in 2014. And then they completely bought out Cape Alumina in that year. So obviously they were working the political stage trying to overturn this decision, if it was a decision by the Queensland government, and it looked like it was working. And then the company changed its name to Metro Mining in late 2014, and I have no idea what happened to the coal tenements. I was trying to find out, but in the end, I realized it doesn't really matter. Perhaps they still have their coal tenements viable to them. Who knows? Maybe if coal prices go through the roof, they could, sell those coal tenements, or maybe start exploring for coal in those regions. Now, the company's flagship project is the Bauxite Hills Mine, which is 100 kilometers north of Weipa. Mining commenced in April 2018, and when we look at the chart, you'll notice when the peak in the share price happened. So remember that date, April 2018. Mining operations are only undertaken in the dry season. I know the weather up towards the Weipa area quite well. I've been forecasting in that area for 15 years. And there is a definite wet season up there. And that wet season does affect mining for this company. So mining only takes place during a 9-month window between April and December. And during the wet season between January and March, there is no mining. So free dig bauxite is mined by front end loaders trucked to a port infrastructure area, screened to a max product size of 100 millimeters, and fed onto a barge loading facility and onto barges. Then the barges are towed down the Skardon River to an anchorage point at sea where the bauxite is transshipped to freight vessels. Now, Metro achieved product guidance and shipped just over 2 million tons to 5 different Chinese companies in 2018. In 2019, Metro expanded the mine's calendar year production from 3 million tons to 3.5 million tons and reached the upper end of production guidance by shipping 3.5 million tons that year. Metro has also completed a DFS for stage 2 expansion of annual production to 6 million tons per annum. I've read somewhere they hope to expand that to 7 million tons. So they are expanding their production, and hopefully with bauxite prices increasing, this company could be producing a lot of cash flow over the next 5 to 10 years. Now, the company, as I mentioned before, listed on the ASX in December 2009 as Metro Coal, and now they've kept the Metro part of the company, but changed the last part of the name to or from coal to mining. Current CEO is Simon Wensley. He's been in that role since May 2021. The largest shareholder of the company is Greenstone Management. They have a 19.1% stake in the company, and the current markup of Metro Mining is $92 million. That's a share price of 2.1 cents. And the share price can be quite volatile, and we'll have a look at the chart later in the video. Current enterprise value of this company is $152 million because this company has a fair bit of debt. And this is a major red flag for me when it comes to Metro Mining, just the debt. I like to see these sort of companies have as little debt as possible. And what I want to see over the next few years from Metro Mining, particularly if they have abundant amount of cash flow, is to start paying down that debt. And the ticker code for Metro Mining is MMI. I've already talked about the one red flag I have, or one of the red flags I have in regards to Metro Mining, and it's a debt. So about $80 million of debt. They also have about $20 million, if I remember correctly, of cash. Another red flag around this company is just a massive increase in shares on issue over the past 13 years since the company listed on the ASX. If we go back to 2011, this company had 164.6 million. Now the company has 3.5 billion shares on issue, and over the past few years, 2 years, shares on issue have almost tripled. And I think the reason they've almost tripled is because the valuation of the company is fairly low, and to increase the amount they want to mine, they've had to build up their facilities, that sort of thing. So they did a capital raising to do that. They also went into debt as well. So increased the shares on issue and also went into debt. So 2 major red flags. Now, possibly this is it for capital raisings for the company, 3.5 billion, particularly if they become operating cash flow and free cash flow positive. They won't have to build up their debt anymore. They won't have to increase the shares on issue. So that could be a good sign moving forward for this company. But I think we'll need a little bit more proof before I am satisfied that this company has stopped their dilution of shareholders any further. Before we have a look at the September quarter results, the Appendix 5B for financial year 24, let's go back 1 year ago just to see how Metro Mining has performed in the past year. And because this company has been mining for 5 or even maybe towards 6 years, we do have a little bit of financial history for this company. They have been issuing 5Bs, cash flows, for about 2 years. I think we have 8 quarters of history. Before that, they weren't required by the ASX to issue Appendix 5Bs, but now they are. So let's just see how this company has improved or deteriorated over the past year by comparing last year's September quarter results to this year's September quarter results. So let's go back 1 year. So 1 year ago, this company had $54 million of receipts. And even though they had a fair bit of receipts, that's a lot of receipts, they were spending a lot. In fact, they were spending almost $50 million just in production. So that's not including staff costs and administration costs. If we include staff costs and administration costs, this company was actually operating cash flow negative by $461,000. So we're not even including investing and financing activities yet. So in the investing activities, we're talking about capital expenditure, exploration, that sort of thing. And that means the company was bleeding cash, even though they produced almost $54 million of receipts 1 year ago. And another sort of side effect of being operating cash flow negative, even though you're in production, is the company eventually becomes in need of cash. And 1 year ago, this company actually did a capital raising, a $21.1 million capital raising. And that's why the cash on hand actually increased $11 million from $11.4 billion to $22 million. Now let's have a look at the financial year 24 September quarter results for Metro Mining. And the whole motivating force for me doing this video today is because this was a good quarter for Metro Mining, particularly when you compare it to the September quarter last year. Receipts up $23 million. Not only were receipts up $23 million, look at the production costs or the spending they had on production. $49 million last year, only $51 million this year. So the gap between receipts and production have significantly widened in this particular quarter. Now, there could be a few reasons behind that. One of the reasons could be just timing of cash receipts. And that could be a reason why this was a really good quarter for Metro Mining. Or possibly the company has just become more efficient in how they mined. Margins have increased. So staff costs only up $2.6 million. Administration costs only up $1.3 million. They did spend $3.9 million on capital expenditure, $4.1 million of leases. But because cash receipts were up significantly more than the increase in spending, this company was operating cash flow positive by $17.2 million for the quarter. And for the year to date, operating cash flow positive $7.7 million. Now, I'm not getting too excited by this quarter result. It was a good first quarter, but I want to see this company have a really good quarter into December, because we already know they won't mine in the third quarter of the year between January and March, and they want to build up their cash. And the reason I want to see another really good quarter in the current quarter is because just the timing of cash receipts. I don't want that to be the reason why this particular quarter was absolutely fantastic. But if Metro Mining can replicate this sort of financial results in the current quarter, I think the company is well on its way to decreasing their debt and proving their business model. Now, in the previous slide, I mentioned they want to see the September quarter results replicated. But when you look at the receipts history of this company, we have 8 quarters of history. I would prefer a little bit more history here to draw any conclusions. And I do have one slight thought in my head when I look at the receipts history. Now, typically, when I look at receipts history, I want to see receipts going up through time. Now, for Metro Mining, we don't really have that just yet. But there is one thing I noticed just by looking at the last 8 quarters of history, is there is potential that the best quarter this company experiences is the December quarter. So the last 2, or the best 2 quarters this company has experienced, apart from the most recent quarter, were the last 2 December quarters back in 2022 and 2023, before we saw a significant drop-off in receipts in the March quarter. And we have also seen a build-up from the June quarter to the September quarter to the December quarter. That was in financial year 23. And we have seen possible signs of that in the last 2 quarters. So there is a world we live in, well, maybe not the world we live in, but there is a possible world, a scenario where the December quarter receipts for Metro Mining exceed $90 million. And that is possible because this company is ramping up their production. So wouldn't be surprised to see an absolutely stellar quarter for Metro Mining, December quarter. It wouldn't even be surprising that the December quarter blows the September quarter out of the water before, of course, we go into the March quarter. And if you just look at the March quarter results in isolation, it would be absolutely disappointing. But we should be aware that this company stops mining in January and there's no mining for 3 months. So that's one thing we always have to be aware about when we talk about Metro Mining. Now let's have a look at the charts for Metro Mining. First one here is a weekly chart going back to the start of 2015 or end of 2014, when the company went through that merger, changed the name from Metro Gold to Metro Mining. There was a lot of interest in this company from when they went through that change all the way through to April 2018. Remember when this company started mining? It was in April 2018, and that coincides with the share price high. I'm not sure if that is coincidence. More than likely it's not, but the share price reached a high of 27 cents in that particular month. And ever since then, the share price has been going down? Well, it's been going down, or well, it went down from April 2018 all the way through to the middle of 2021. But since the middle of 2021, share price has been going sideways. So I do think there is a possibility the bottom has been reached for this company. And to verify the bottom has been reached, I think this company needs to prove to the market that they can produce cash in their operations, that they can become profitable, that this is a viable company, a viable business. But if we take a look at the daily chart, this goes back to March 2022. Nothing too exciting here. Now, it does look like the low has been reached, possibly reached, and that low was in March of this year at about, what was it, about 0.8 cents. So what happened in March of this year? Well, it was during that bad quarter where they're not mining. The other thing you see in March, when the share price low was reached, was massive volume. That is a good sign that is a low when you see massive volume coming in. So that was a time to buy Metro Mining when there was absolute negative sentiment in this company. Couldn't get any lower. There was no mining of bauxite. And then the share price did improve. In fact, the share price went from 0.8 to a high of 2.8 cents. So the share price almost quadrupled in about 5 to 6 months. Share price has been under pressure since that high of 2.8 cents, but it hasn't decreased all that much. Now, if the company can produce an absolutely fantastic December quarter, become even more operating cash flow and free cash flow positive, increase or significantly increase the cash on hand, I think maybe the market will become more aware of this company. But still, the market is wary of Metro Mining right now. That is all I have for this look at Metro Mining September quarter results for financial year 24. A really good quarter from the company. The company was operating cash flow and free cash flow positive, but there are a couple of red flags. The first red flag is the debt. $60 million of net debt, $80 million of debt. And I would like to see the company bring back this debt, decrease that debt, or at the very least, increase the cash on hand. And there's a possibility the company can do that if I think they have an absolutely fantastic December quarter. And I suspect they might just do that. But the market is wary right now, and that's why the share price is a little bit suppressed and really not going anywhere. So if you have any questions, any thoughts about Metro Mining, I'd love to hear your opinion. So leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.